Hello, today we're going to be doing a quick video here on Tesla. Let's go ahead and take a look at their free cash flows. As you can see, they used to be negative, but they were growing tremendously, so that makes a lot of sense. But as you can see, as of the last 4 years, they've had free cash flow, and it keeps going up. This year, they're not doing as well on cash flow so far compared to the previous quarters of last year, but that's okay because they're still free cash flow positive, and we can see that they're growing at a tremendous rate overall, even including revenue. So we're going to go ahead and use 2022 numbers, um, and we'll do a calculation from there. We can go ahead and look at their assets. Their total assets increased by 26%. It's at 93 billion. Their total liabilities is at 39 billion. That's a 17% increase. Their long-term debt is a 15% increase, but it's only 2.426 billion. And their cash on hand is 26 billion, 23% increase. So they could get rid of all of their debt right now if they wanted to. So they have a tremendous amount of cash. They have a tremendous amount of assets, liabilities. So they're doing really good overall as a company, and they have Elon Musk, so you know that's going to be true. As you can see with their revenue over the last 12 months, it's up to 95 billion, which is a 28% increase year over year. That's tremendous. That's really good for a company this size, still growing by 28% year over year. Their most recent quarter was 8%, but as you can see, overall, the trend is up. Like 2020, 28%. 3 years later, we're still at 28% year over year. So they're growing tremendously. As you can see, their net income it declined over the last 12 months, but it's 10 billion net revenue, only declined by 3%. That is a ton of net revenue, especially when you consider what they used to be on the negatives. And then 2020, 690, and up to 12 billion net income. Yeah, that's tremendously wow. Like they're a crazy company. They're really good. I personally don't own any shares right now because I just want to get a tremendous value on them. And they do cost a lot of money to buy a lot of shares, so it's not like I would own a ton. To own 100 shares, I mean, you'd have to put down a hefty amount of money to own 100 shares to do covered calls or puts. Um, so, anyways, if you come to their financials, you can see um, like their gross profit over the years, how little, and up to 20 billion. So there's a lot of things that you can look into here and just look at where they used to be, like basic EPS numbers, their earnings per share, all that stuff, and then you can see these numbers I was telling you about the net income. But you can just see more things if you come over here into the income statement, the balance sheet. These are things you want to look into. I mean, if you come over to their EPS, you can see uh, down here. See, they were in the negatives for the longest time, 2020, and now look, they're up to 3.62, and over the last 12, 20 months, they're at 3.11. So um, Tesla is a beast of a company, of course. So we're going to go ahead and use their free cash flow from last year. And we're going to put 8502, 28% growth rate. We're only going to use the 8% discount rate because Tesla always trades at a premium and because they deserve a discount rate of 8%. 2% perpetuity with outstanding shares at 3493. We come to a discounted cash flow price of $295.88. Give ourselves a 20% discount rate, or at $236.70. And, they're a little bit over that. And if you come over here to the Benjamin Graham, I mean, we'll just go ahead and do it. 3.11 growth rate 28. For what is a good PE for Tesla right now? That's something we want to determine. I don't like to do it the Benjamin Graham style and come down to normal because a company like this is always trading on. So it's currently at 84. Oh, this is the lowest. Okay, so we'll go to about 45. So about $249.73, because you can see it did get down to 34 and 61. We could cut that in between to about 45 for a PE of no growth for Tesla, with about $249.73. So that would put it right around where it's trading at right now, actually. So that makes a lot of sense. Um, so yeah, but our final, we're using our discounted cash flow. We're going to come to a discounted cash flow price of $295.88. We would give ourselves a discount rate 10% at least, so that brings us down to here, $266.29, which tells me this is trading right now at about a 15% discount from the discounted cash flow price. We could use our aggressive calculator here, and if we do that, let's see. Um, 8500. We're just going to 8500 growth rate, 28%. Discounted rate, we'll keep it at that 10%, 2% perpetuity. We can go to their cash on hand. So you go to 26077. Debt, well, we already saw they had a little bit of debt. 2426. Outstanding shares we determined was 3493. 3493. As you can see, the rates we have here is $363.86, and then with the cash and debt, we have $370.63. That's with a 28% growth rate. If you went to that 8% growth rate they're currently at, you see it brings way down here, but I don't think Tesla is going to be doing that anytime soon. We'll go with that 28% growth rate, 10% discount rate, 2.0 perpetuity, and you can see where it falls down to. So that's pretty tremendous, honestly. As you can see here, though, we used the 8% discount rate. If we use the 10%, it brings it down to $202.73. But they always trade at a premium, so a company like Tesla deserves an 8% discount rate. And that's how I personally feel about Tesla. So if I was going to purchase shares, I'd like to get down to at least a 30% discount rate personally, just because there's so much ebbs and flows to Tesla, and it gives yourself a margin of safety in case there's any bad news or they really start to slow down in growth. Let me know what you think.